What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is August 27th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I not only want to spend some time to talk about the cool down that we've been seeing in altcoins following the correction of Bitcoin, and also what our general time frame is and what we're watching, but outside of that as well, talking about how to avoid a lot of the hype in DeFi. There is some big disparities between the fundamentals and also the reality of a lot of DeFi protocols, so it's important to spot these if you're building any long-term positions, and also talking about some positive news as well as what I'm positioning myself in during these times. So we've got a lot of things to discuss, and along with that as well, we've got a sponsored interview with Mauricio from Ledin.io. So stay tuned for that. You won't want to miss it. All right, so let's go ahead and dive into this, guys. Taking a look over the last 24 hours, we can see the major market leaders have not moved too much. We do have some plays here in the lead, which I'll talk about in just a bit. We can see the vast majority of tokens in the red here, but generally still in a no trend scenario, between 1% to 2% to the upside or downside. So nothing too dramatic right now. So I want to go ahead and talk about the first topic we mentioned here, and that's focusing on determining where we are right now with altcoins. Are we going through a substantial pullback? And yeah, there's really kind of three key levels that I'm watching here. As you all know, keep my trading pretty simple. I like to look at the longer term time frames and look at history to see what it can tell us here. Now, what we can generally see here is that there's three kind of dynamic ranges of price here that we're going to be watching, for market dominance. And they're basically 2 percentage intervals, from 40% to 38% to 36% for market dominance of altcoins. So at 40%, this means that altcoins own 40% of the overall valuation of the market, and Bitcoin makes up 60%. And down here at 36%, same in this case, 36% altcoins, and then the rest in this case going to Bitcoin, right? So, and this dynamic here, right, nothing too substantial in the sense of maybe larger plays. So even if we went down like to 36% here, if you're holding Ethereum or Litecoin or one of the major large caps, it's probably not going to be too much of a hindrance for you to hold your positions through in this case. However, during these types of pullbacks, as we know very well, back here in late part of July, we were still very early in some of the momentum movers in the altcoin space. And ever since then, there's been some crazy gains that we've had in a lot of these plays. So it's important to watch these levels here. And again, I'm just going to keep it simple here. To be honest, guys, there really is no guarantee on time frame. What we can generally see here is that we have been keeping within a general channel from the bottom here, right? Again, this is kind of rough, but you can see here that we have been building a general channel here for the line of resistance, line of support. You can have a general ballpark range here. But it could be that we break out of this channel as we've been having a nice steady climb, and we need to push sideways for a while on one of these levels. And if we break below this substantially, which we haven't had yet, every time we came down here, the wicks clears up here, and we get the price a little bit higher for the daily close, or the level of market dominance. If we close below there, it's probably that we're going to the next big even at 36. So in that case, more of a substantial pullback in altcoins, coming down on what was previous resistance in the past, making it support like we did over here. Could very well happen. And again, just taking a look at some of these altcoin plays, guys, I have to be fair here. It's not only important to watch what's happening here on the chart for altcoin dominance, but outside that as well, just dive into the market here. Take a look at REN, right? We were talking about REN back here. Oh, this is the you can't even see it now because I have the charts moved so much. Maybe if we switch to the logger thing. Yeah, still, it was so easy because back here, this was the price action we were working with. But again, we've been talking about a lot of these plays for months on end from the newsletter, but also as well on the channel. REN was a play from our top 10 list, and now it's much higher than where it was. In fact, back here when we were starting to talk about it at 600 sats, it's now 6x in this case. And that's not even including the absolute top. That's where it's at right now. So bearing in mind here, a lot of these protocols have been doing great. They've been making fundamental progress. DeFi is getting traction. It's getting liquidity. But it might be that some of these need to have a substantial pullback. Things just don't go vertical. And the volume, as much as the price is higher, isn't as exciting as it was back here in July. So again, not hitting on REN. REN's just the worst performing for today. Take a look at Aave. Do you guys really feel comfortable buying Aave at these prices? I personally don't. We talked about it yesterday. Aave is a protocol. I think it's fantastic. They're making great progress fundamentally. I don't think it justifies where it was back in March, going from 300 sats to 6,000, nearly 6,800, give or take, right? So there you go, 6,800, so I was right. No, but all in all here, right, you see what I'm saying, guys? It's that these things have made very vertical moves. And again, volume. Binance is the major exchange. Not highly impressive in the sense of the volume. Again, yes, you have to understand that the tokens are trading at higher valuations. I understand that very well. But it doesn't negate that there are a large amount of tokens out there that could be waiting to, again, sell off on the market and then spike that volume candle at ridiculously high valuations. I've seen it before in crypto. Again, it doesn't have to do with my fundamental opinion on these projects. Same goes for like a Mesigo, right? Love this move here, right? Great technical pattern. We talked about this and how it could still have some room to grow here. But again, you don't always want to buy right at the peak of things, guys. Wait for a substantial pullback like we saw back here around 46, 50%. This is what we want to look for. A lot of the kind of smaller emerging enterprise protocols, Phantom, Perlin as well, all looking a bit exhausted here. Even some other plays like Waves that we talked about. Waves looking a bit exhausted as well. Hedera looking like it needs to come back down to its support line. This is one of the newsletter talks, ones that we recommended. Again, waiting for the cool down period. Matic, looking at this one as well. Matic looking pretty decent. So again, I want to talk a little bit here, as we're just going through the list here and just kind of listing off some examples. I want to go ahead and talk about one thing that I think is very important, above all, is spotting very big discrepancies between reality and also as well token valuation. So we talked about this a little bit yesterday and just analyzing DeFi protocols. Taking a look here at the top, there's one here that I've actually toyed around with in the past. I've used it. It worked great, right? And that's BZX protocol, right? I use BZX protocol. It's basically it's not only a platform where you can earn interest on your crypto, but the major service that you're lending to is people who are most likely in this case building a leverage position in this case, right? They want to 2, 3, 4, 5x on certain altcoins. Now, if you were to look at the total assets under management here for BZX, again, I'm not trying to rag on the project. I've used it before. I think the team's fantastic. They had great customer support and stuff when I talked to them. You can see here that BZX has been losing its market share since back here in February. In fact, now it has less than $1 million in assets, and if you take a look at Ethereum or in Bitcoin or in DAI, it's basically off the map now. But BZX, on the other hand, just launched a major token that's around $112 million market cap. And if you take a look at it more individually on price, you can just look at the, ever since it launched here, it's basically 4x in valuation almost. This is what I'm talking about in the sense of discrepancy. Sure, there might be some great incentives that are going to come with the token. Maybe there's something around the corner that I don't know about. I'm not trying to rag on the project. What I'm saying is that we need to have some kind of understanding of fundamentals so we don't get caught. And a good example of this is Balancer. Balancer has been one that has been constantly, ever since it launched back in June, similar to Uniswap, rivaled itself in the sense of liquidity. It is starting to, again, not only see an appreciation in its liquidity, but also if you take a look the token here for Balancer. Right? We can see here that Balancer has come up here at a fundamental rate of what it's seeing on its actual assets under management or the total value locked. This is what we want to look for. Now, last two things I wanted to talk about here. I do want to dive into this news here. This is really interesting. The New York Stock Exchange is allowing firms to raise funds directly through listing. This is something that's actually more broad and not just relevant to crypto, but basically means that they're going to have a more expedited version and a much more affordable version of initial public offerings on the New York Stock Exchange, which I think is really cool. It really shows the SEC is like finally kind of catching up, and I think playing catch up in a sense with kind of years of backwards regulation. And it's now starting to allow people to participate more, not only for companies to raise easier, but along with that as well for more people, as you read throughout the article, more people being able to participate outside of just accredited investors in initial public offerings. So very, very exciting news in that regard. And it'll be an overwhelmingly positive thing for financial markets. But going on here, I know we've kind of been bouncing around a few different topics. We've been obviously talking about altcoins being a bit overextended here, guys. And the thing I look for in this market is to try to look at the top 100, maybe the top 200, give or take, depending on your risk profile. And I look across the board at the charts and I try to think, okay, what charts are showing me 80% plus corrections? Which ones are showing me, price is back down towards a substantial range of price that we've seen in the past. Maybe, for example, the first short top before we really had an exponential cycle. Which ones are showing great multiples in their cycles? Which ones are emerging interesting projects? And these are the things I look for. And I've talked about a lot of these DeFi protocols for a long time, guys. We've been doing great in the market. But one of the few that's really caught my eyes, as I talked about back about a week ago, is Ampleforth. I've talked about Ampleforth a decent amount. And again, this really kind of plays into a lot of the things that we look for, right? Taking a scroll over here just so you can see it, 12,819% return, 128x here in the sense of price. This is really, really phenomenal stuff to see these kind of multiples in the sense of cryptocurrency. And I think again, what we want to watch for again as we have these kind of multiples is probably that 80 to 85% correction range, which currently right now and before this through. And I'm not here to say again that you guys should buy or anything. I'm just saying like keep an eye on plays like this. This is the kind of stuff that I'm watching in the market. And again, focus on discount plays. I don't like to buy things at tops. I don't like to buy REN when it's all the way up here. We bought it when it was much cooler down here. And we were able to make some great multiples on the trade. But the same goes for, again, even in plays like, for example, Kava, right? Kava BTC, like Kava long term, but it looks like it's a bit top heavy. Take it off the logarithmic chart, you get an even more sense here in this case here, going from 5,000 sats up here towards around 35,000 sats, a 7x against Bitcoin. There could very well be some profit taking here, especially seeing as it's not rebounding, right? We're not getting that new wave of liquidity just yet. It's probably that the market is a bit exhausted, and that's why we look for these kind of plays here, right? We want to watch here for opportunities in the market where we can possibly find things at a discount. The thing that I'm really watching for here, when you get these plays at an 80% correction, you want to kind of watch for the lows here to start breaking off of the general line of support here that's descending, right? I want to start to see it kind of flatline. That's the general goal here. I'm not saying that it's going to happen right away. I'm just saying that that's the thing I'd watch for something like Ample, for other plays as well that are starting to bottom out in the market. There's a few other plays like this, but Ample's one of the few exceptions here. And what's nice is that Ample is aimed at eventually getting back to a stability peg. So the other thing that you can look for in this market is not only for assets like Ample that are stabilizing, but always consider you can always go back to stable coins. So I know I rambled on enough today, guys, but I want to go ahead and dive into this really interesting interview with Mauricio. I think you guys are going to love it. We talk about the craziness in DeFi, what's going on, and the kind of deposit market for earning interest. So let's go ahead without further ado and dive right into the conversation. Alrighty, everyone. So in today's sponsored interview, we're sitting down with my good friend Mauricio, who is one of the co-founders over at Ledn.io, one of the leading platforms where you can earn interest on your stablecoins as well as your Bitcoin. I'm here today to talk to him a little bit about what's been going on at Ledn, as well as really kind of talking about some of the broader topics, all the craziness and decentralized finance, as well as diving into Bitcoin's price action as of recent. I think we've gone through a pretty interesting correction in the later part of August. Many people on their toes as to whether or not the recent rally is going to fade off. Mauricio, all in all, man, it's good to have you. Thank you for making the time as always.
It's always a pleasure, Nick. Always a pleasure to be here.
Absolutely, man. So I want to go ahead and dive into this kind of first topic here of decentralized finance. I'm someone who's a little bit more loose with the term of DeFi because I think DeFi, yes, of course, there are different levels of degrees of trust. And I know that a lot of people in the crypto space will try to take the most minimizing of those options. But it tends to be that when we're looking at one of the biggest applications in DeFi, which are deposit pools like Compound or Aave, the yields on stable coins and crypto positions aren't very well. And the reason why for this, I always try to explain this to people is because unlike a smart contract, a centralized lending pool or basically a custodial lending pool like Ledn can actually balance the books. You guys can actually match basically the supply and demand or the depositors and the borrowers. So maybe you could spend some time to talk about that and why you guys are able to pay, the high rates that you guys pay.
Yeah, no, that's an excellent question. And I think it's important for people to really kind of understand the dynamics of the structures of centralized versus decentralized lending entities. Because I also believe, like you, that they are part of the same spectrum. And when I say that, I mean, where I think centralized lenders like ourselves have I guess, an edge in the products that we can compete better on are the products that are longer term. And that basically people that don't have or don't require such a high learning curve to use decentralized finance, because we have educational resources, we have customer support, we have essentially you can learn how to use the product through us. Whereas with a decentralized finance platform, you have to rely on blogs and perhaps people that that aren't really necessarily associated with the platform. And I think based on the sort of type of lending that each one can specialize on, and where I think we'll be kind of seeing more and more each group go towards a different part of the spectrum is on the DeFi side, on the smart contract side, they're going to be very efficient at programmatic lending. So everything that has to do with very quick loans, very short periods of time, and almost like sophisticated transactions, kind of like a flash loan structure. I do think that's going to continue to proliferate because that's just a way to do arbitraging around smart contracts. But I think where the centralized groups are going to do much better is on the longer term borrows, because when you borrow from a platform, you don't know what your rate's going to be a year out. You don't know whether you're going to be able to sustain that loan for that year. The rates may change overnight and you may get liquidated. Whereas with a centralized group, we have a lot more visibility with institutional borrowers, institutional lenders, and we can provide longer horizons for both your of interest rates for your balances and also for your loans. So for example, at Ledin, we're holding the 6.5 APY rate on Bitcoin till the end of the year. Because we know we can pay it till the end of the year. And also with the USDC account. So we're paying 10% APY on that account, and we're doing that till the end of the year. We think those are the things that we can do a lot better as centralized lenders.
Yeah, exactly, Mauricio. I wanted to hit on that. I remember we talked in our last interview about that announcement, and I have to say hats off to you guys for maintaining those yields and giving people the peace of mind that it's going to be holding at that range. Because I think it's not only going to be a very good competitive advantage, but as you mentioned, the bigger problem here with decentralized finance is, again, these contracts are automated. They have specific algorithms about how they actually determine what the supply rate is going to be and what the borrowing rate is going to be. So let's say, for example, just hypothetically, what you might have is a scenario where someone might make up a single entity, or maybe 2 or 3 entities make up the entire amount of the lending supply for a certain altcoin. And in this case, if you have a lot of borrowing demand in this case for a certain altcoin, and those suppliers reduce their available coins in that case, you can have, as you mentioned, a higher APY in this case, that are basically a certain amount of money that you're going to be owing. And that could lead, as you mentioned, into a liquidation event where someone may not be able to pay that yield, or it's going to be much, much more difficult to pay it down. Even though you expected it to be around 2 or 3%, it might have gone to 15, 20, 30%. So this is, again, the dynamics that I think, as much as it hasn't been a too big of an issue for DeFi right now, it is going to become a prolific issue. And when we have those type of events like we had in March, you don't have an exchange who can, again, manage the books. You can get on the line with and say, okay, how do I, add in more collateral? How do I make sure I don't get liquidated? Whereas with Compound or MakerDAO, millions of dollars lost, right?
Yeah, and again, there's trade-offs, right? And so I think that each one of the setups is can be more suitable for different types of borrowing and lending. And so I think for the real use case, not the real use case, I should say, but for a normal person, for an average person who's not a sophisticated trader, who doesn't want to be checking their screens all day and potentially having to act on a liquidation or having to move because a new vegetable token was created and it's soaking out all the liquidity. So, if you don't want to have those concerns, you could just place your USDC or your Bitcoin in a centralized lender like ourselves, and you'll earn interest without really having to worry about that. However, if you're the guy that is looking, to constantly go after the next vegetable, then perhaps there's other options where it'll be more entertaining and obviously more risk as well.
Marisa, I think if we took a step back here and looked at what we were saying about 6 months ago, we'd be asking ourselves, what is a vegetable token? And now we've got Yam token, which was one of the big, sweetheart projects in the DeFi space for less than about 7 days. And again, was basically an unaudited smart contract in the DeFi space that brought in hundreds of millions of dollars in capital. And I think, again, Marisa, you hit on a good point there. I want to get your point, your kind of perspective here on DeFi and kind of craze that we've seen really over the last 2 months. But I mean, I think the big difference here and the big kicker about, our kind of our perspective in the cryptocurrency space is that centralized counterparties having some sense of authority or like trusted solutions is the worst thing we can have right now. But what I always try to emphasize to people is that this is a new emerging space. And one of the bigger risks in this case is deploying something brand new and radical in this case that could possibly lose millions of dollars of funds. That's much more high risk in this case. Same kind of philosophy was input when I, for example, when we were building Digifox, one thing we made sure of was that, using your phone and email in order to access your account and access a new public-private key pair through a smart contract wallet is much better than requiring people to write down 12 to 24 words. And if they don't write that down, they're going to lose it, right? It's better just being a centralized solution in that case at the end of the day.
Yeah, and like I said, there are trade-offs, and it's still, I believe it's still a little bit too early to say that the DeFi, the projects in DeFi that do scale and end up delivering value to clients at scale, it is still too early, I believe, to say that those projects won't come under regulatory scrutiny. and won't end up to one day have to do KYC and do become another centralized entity, because as you know, the design can be decentralized and the execution eventually can be decentralized, but every project has to get off the ground as centralized. There has to be a leader, there has to be a team that builds code. At some point, if consumer protections are required or demanded from the larger market, they should be able to talk to a regulator. You know, to my knowledge, there's already DeFi projects that have somehow applied for licenses, which I don't really know how you know, a community, frankly, is going to meet reporting requirements, etc., with a regulator in an eventual decentralized world. It'll be very interesting to see. But what I think is more likely is the projects that have had success, that have been backed by, in many cases, funds and perhaps some other investors, they will not want to shut down if a regulator comes knocking on the door, and they will likely go and comply. And you'll start seeing, I believe, everything will start looking more alike, and the difference will become: are you programmatic or are you long-term centralized? That's going back to the original point that we were talking about.
Yeah, it seems like in this case, you basically have kind of two elements at the end of the day. What DeFi is, you know, as a broad market, is going to be. You're going to have either the more human element, which I think is in this case Ledin. It's going to be able to have more of a traditional banking experience where you have someone on the line you can reach, or you know, through customer support messaging, and also maybe even offering more traditional financial services. As you have that ability to step into the real world, to do credit checks, to do things where there is identity, there is some kind of element where you can determine the creditworthiness of a borrower. And then the other end here in this case is kind of a more permissionless capital in this case. But at the same time, I think, as you mentioned, Mauricio, we're going to start tapping into, as we've already seen with Aave and MakerDAO, we're already starting to see conversations where they're going to be tackling in real world assets from projects like Realty. So they're bringing in real estate assets to use as collateral. And I think this is fantastic. But the only way you have that collateral having value is by having a regulator and an authority figure that's stating that token is a voucher for that home over there. The moment the regulator doesn't enforce that, Aave and MakerDAO and all these protocols are going to have a very big problem on their hands. So again, I think that again, it's this kind of practical mindset of like, we've obviously seen the regulators have let this stuff kind of go on and let it flourish. And I'll be honest, I don't think things like YAM should be going unnoticed in that case. Even if, and again, you can say that it's the investor or it's the speculator in this case who is to blame. But I think at the same time, having a standard where we normalize unaudited smart contracts coming on chain, I think that that's something that I definitely think is just going to put a bad taste in DeFi, and bad taste in the mouth of the regulators, and then also it's going to lead DeFi on a really bad track in the long term.
Yeah, no, I think, you know, we as an industry, you know, can do, I guess, a bit better as far as how we present what's put out for retail consumption, because we need to be aware that, you know, we are in this day in and day out, and we have a pretty decent understanding. But I believe it was Jill who posted a tweet recently, which really stuck with me, which is, imagine being a person today that has no knowledge of crypto and reading about YAM and trying to find out what crypto is through that. That basically you're going to run, because the learning curve is absolutely astronomical. It is a bunch of things that almost sound nonsensical. And you know, while Bitcoin was already somewhat of a challenging concept to understand for many, once you throw in DeFi and you throw in these tokens that are seemingly creating, you know, again, vegetables out of thin air, and people are paying money for them, people are going to get thrown for a loop. And so I think we, you know, to your point, we need to do a little bit better at what is the kind of image that we're creating around our industry when we basically participate in these types of overnight unaudited experiments.
Absolutely, Mauricio. And I want to kind of build on this. You know, I think that there's kind of two worlds here right now. There's kind of the DeFi that isn't providing much yield right now. There's the overhyped kind of world of DeFi where, again, as you mentioned with YAM and these kind of yield farming projects, you're getting crazy yields and they're advertised as being sustainable and long-term and always finding the best deal. But the problem is that they're arbitraging off of opportunities that currently exist in a very sporadic form of DeFi. And I think that they're not going to last long-term. In many cases, as we saw with YAM, sometimes due to failure of actual sound development and code auditing, it can lead people to losing everything. And I think the happy medium in this case that's going to make DeFi a multi-trillion-dollar market is building a new spectrum of finance, in this case, that's outside of the traditional bounds of the Bank of Americas and the JP Morgans of the world, that pays you a decent rate of interest. As you mentioned, I mean, you guys are paying 10%. And the thing that I always emphasize, Mauricio, I'm pretty confident that for you guys and all the other different types of lending providers in the space, you'll be able to provide these relatively stable and high interest rates for the simple fact that you basically have, again, the ability to balance the book. But as you get a new wave of depositors, it's coming in at a time as well where there's peak demand for capital within the cryptocurrency space. If Bitcoin doubles tomorrow, that demand is likely going to double on the borrowing side as well, if not more. So I think in that case, there's going to be a very healthy balance in that case. And I'm really excited to see how you guys continue to grow as a company, exploring new services. And for people who may want to just kind of keep in the loop with Lennon, or maybe even tap into the B2X service, which gives double exposure to your Bitcoin position or deposits, I just want to let everyone know we've got a link down in the description so you can not only figure out about those services and interact with Mauricio and the team. But man, I got to say, Mauricio, this is incredible. It's good to see Lennon's growing. I think as we talked before, this has been one of your best months yet. And I'm really excited to see where you guys continue to go into the fall, into the winter this year.
Thanks, Nick. It's been an amazing journey, and we are very excited about where we're going. So we'll keep coming, and we'll keep updating you.
Awesome, man. Sounds good.